traders, if you're tired of entering trades too late or getting faked out by sudden spikes, then you are about to discover one of the most effective techniques to capture high probability moves when trading breakouts. Whether you are trading volatility 7 to 5 index, boom and crash, currency pairs, or even cryptocurrency, these methods can help you ride strong trends from the very beginning. Make sure to like, subscribe, and hit the bell icon because this strategy could be the game changer you have been waiting for. So grab your writing material. Let's dive right into the lesson. Now, firstly, we are going to we want to define what a breakout means. What really is a breakout? What is a breakout? A breakout occurs when price moves beyond a defined support or resistance zone, typically after a period of consolidation. What does this mean, guys? So, for a breakout to occur, it means there has to be a period of consolidation. What do we mean by period of consolidation? A period of consolidation is when price moves in a range form. Okay, it's not trending up, it's not trending down. Okay, it's just moving in a range form, like in a bus form. It could also form other patterns while being in consolidation. Example here we have here on this illustration. Okay, so we can see that these blue lines here, okay, the blue lines here, they were used to mark out the resistance and the support zone. So price is moving. Okay, initially price was bullish. Okay, it was bullish, and when it got here, it hits a resistance zone, and then it also went down, hit a support zone, but never went further. It didn't go upward, neither did it go downward. It continued staying on this same level. Okay, so when price moves in this manner, that is moving in a sideways form, instead of being bullish, okay, instead of either trending up or trending down, it's now moving in a sideways form. So we say price is what? Consolidating. So that is what we call period of consolidation. And price can consolidate in different form. It can form different shape. It can be in a bus like form, like the one we have here is like in a bus like form. Other times it can be in a triangular form, it can be in a pennant, it can be in a wedge. There are several other forms. I think I'm going to make video on that where we'll discuss other forms of consolidations and how price eventually breaks out of it. Okay, but today we're just going to focus on the bus like form of consolidation. So right here on our illustration here, you can see that price was initially moving in a bullish form. Okay, it was initially trending up, and then it started consolidating over here. Okay, so this period is called what? Period of what? Consolidation. Now price needs to break out of this level for you to what? Enter a trade. Okay, price need to break out of this support zone or this resistance zone for you to what? Enter a trade. So when price is consolidating in this manner, you can't tell that it's going to like break out towards the upside like this. You can't really tell. Or it's going to break downwards. You can't really tell. So you have to wait for it to show signs of what? Breakout. And what are those signs that you can use to identify that truly the price has broken out of this zone, this support zone or this resistance zone? Okay, it will show signs of breakout, and we're going to be discussing the elements that you have to look out for you to know that a breakout has occurred. Okay, so volatility indices are known for wide movements. When volatility indices break out of any range of consolidation, it moves very fast. Okay, it moves very fast. Yeah, so So breakouts are powerful, especially when you pair them with what proper confirmation. And these confirmations we are going to be discussing in this video. Now let's talk about the key points when looking out for breakouts. Now, a breakout is not just any price movement. Yeah, breakout is not like your regular price movement that you have like it's just trending up, okay? You just know its price is going up. No, it doesn't just make move. When breakouts occur, it tells you there is a special intention behind it, and that special intention could either be that price is about to go up or price is about to what come down. So breakout does not just it doesn't just move anyhow. When it occurs, is it has intention behind it, and that intention is what we are trying to what we're trying to capture. Okay, so another point that you should note is that breakout shows that traders are stepping in with high momentum. Yeah, so whenever a breakout occurs, okay, if price have been consolidating over here and okay, consolidating over here, right here, both buyers and sellers, they don't, like, no one has an upper hand in pushing the price upward or downward. Okay, so you just stay put without taking any trade and watch out for, it's like a battle. Let me just use that word. So it's like a battle between the buyers and the sellers. Okay, so the buyers will push it up, sellers will bring it down, buyers will push it up again, bring it down. So like that until one out of these um competitors wins the battle. Okay, one wins the battle by either the sellers wins the battle by eventually breaking the zone, okay, and pushes price down, or the buyers wins the battle by eventually breaking that zone and want pushing price up. So when a breakout occurs, it tells you that the sellers or the buyers are stepping in with high momentum, like they are ready to what, to push price upward. And what do you do at this stage? You get ready to what, to take a trade. Okay, so volatility indices, they are prone to sharp movements, so catching a breakout can make you to have huge profit in the market. Now let's talk about what we are to look out for while trading breakouts, um while trying to identify a breakout. The elements that you are to look out for in order to trade breakout successfully. Okay, one of those things is that there has to be a clear range. Okay, look out for a clear range or a clear consolidation zone. Okay, so you look out for tight candles forming in a boss like structure. Okay, so on your chart you should see something like this. Okay, so on your chart you should see something like this, price going like this in this manner. Okay, so price goes like this in this manner. So you should be able to identify consolidation zones like this for you to be able to watch out for a breakout. Now, take note that on your chart, you are not going to see it so smoothly formed like this, like every resistance point is same level, every support point is same level. No, okay, some might be a little bit higher while some might be a little bit lower. Okay, but when you look at it, you will know that formation here is in a boss like form, is in a boss like structure. Okay, and also you can also see other forms of consolidation, that shapes like a wedge. You can also see other shape like a triangle. Okay, but let's focus on the boss like form of consolidation today. So make sure that you avoid what range that are not clear. When you see a range in a manner like this, let's say price goes over here and then it comes down, okay, and then it goes up, okay, comes back down, even goes even lower, and then it goes up again. Okay, this is a choppy range, like it's not really, it's, although it's consolidating, but the consolidation is not very clear, and trading this kind of breakouts might get you trapped. Okay, so when you see range, a consolidation zone that looks something like this, that is not very clear like that, just stay away from it. Clarity is the key. So make sure you look out for a range that is very clear, a consolidation range that is very clear. So another thing you have to look out for, the second thing you should look out for, is a breakout candle. Okay, what do we mean by a breakout candle? And that is the candle that actually broke out of this, either this support zone, this resistance zone, or this support zone. Okay, the candle that actually broke, and that candle should have a high momentum. It should be a full body candle. It shouldn't be a wicky candle, like a candle that has long wick and all that. Let's move over to the chart. Let me show you how a breakout candle should look like. Okay, so here we have a breakout. Okay, and looking at this zone, we can see the consolidation zone over here. Okay, this is a consolidation zone. You can see it formed like a boss like, okay, manner. Now let's identify the breakout candle. Now the candle that actually broke this zone, which is this support zone over here, is this long candle. Can you see that? The candle is full bodied. It's not a candle that has long wick. It's not a candle that has long wick. It's full body. Okay, and you can see that it's very large, and it tells you that there is a high selling power that has come into play, and this gives you the confidence to get ready to get into the trade. The candle that breaks the range must be strong, and it must be full bodied. Now you have to avoid what doji candle. If you see a doji candle breaks through this zone or breaks upward, do not take that trade. Okay, because it doesn't really show that there is a high momentum or high selling power or high buying power. Okay, so do not take such trade. So when you see a doji or a wiki candle, do not take it. Another thing you should look out for is retest or momentum. Okay, a retest or a momentum. Now we already have a momentum here. This is a type of a breakout with a momentum. There's no retest here. There is no retest. Retest means when price breaks out of this zone, and then it comes back, touches the zone again before moving downward. So, but this is not the type of breakout we have here. The type we have here is a high momentum breakout. Okay, I'm going to show you the retest type of breakout. Okay, so let's move further. Now let's talk about the entry strategy to use in a breakout trade. There are two types of entry for you to use. So I'm going to go over to my illustration board and illustrate that, and we'll be back to the charts to see read chart examples. So I'll be illustrating the first type of entry, which is the momentum entry, okay, or the breakout entry. Okay, you enter a trade immediately after the breakout candle closes. So let's say price was initially trending up, and then it gets into a period of consolidation over here. Okay, and it consolidates for a moment, and then it's going to break upward. Let's say it's going to break upward in this case. So when it breaks up like this, it just breaks up and starts going upward. It doesn't come back to touch this zone. It continues trending up. It doesn't come back, like there's no retest. It doesn't come back to test the resistance level at which it broke out from before trending up. No, it doesn't do that. So the momentum type of entry is when price breaks out of a zone, okay, and it starts trending up with high momentum without coming back for a retest. So how do you enter in such cases? Let's go over to the chart for you to know how to enter in such cases. Now this breakout over here is an example of a high momentum breakout, and you enter this in an aggressive manner by entering immediately after the breakout candle closes, and this is the breakout candle. Okay, so you wait until it closes, and when it starts forming the next candle and that candle also appears to be what, to be bearish, okay, you go in for a trade over here. You understand? So that is the momentum type of entry, or the breakout entry. Okay, you don't go wait for a retest. Okay, why the second type of entry is a retest entry. So how do you enter this type of trade? Okay, so for the retest type of entry, when a breakout occurs, you wait for price to come and kiss this level at which it broke out from, like as illustrated over here. Can you see that it initially broke out, okay, from that level, and then it came back to kiss that zone? That is the point at which you will have to what, enter the trade. But you don't just jump into the trade just like that because you saw that price has reached that zone again. No, there are factors you have to look at for at that very point, that is at this very retest point. So you have to check for the presence of reversal candlestick. Okay, I talked about some of the reversal candlesticks in my previous video. If you have not watched that video, you can go and watch it. Okay, the title of the video is how to spot um price reversal before they occur. So if you haven't watched it, you can go and watch it. So one of those reversal candlestick that you will identify here is, you could see a doji, you could see a hammer, and then you could see bullish engulfing candlestick at this very retest level. And this gives you the confidence that yes, the price is indeed going to what, reverse and start what, trending up. And then you put in your long position over there, and then you ride the trend and make profit. So this is the second type of entry, which is the retest entry. So ensure you look out for reversal candlestick patterns at these points. So let's go over to the chart for you to see a real life illustration. Okay, so let me show you an example with this breakout from a wedge pattern. Okay, let me see that price was initially consolidating in this form. Okay, and then it broke out. When it broke out, it came back towards to retest this level. Can you see that it came back to retest that level? So it is at this point that you will open your trade. But before taking your trade, you have to check that point to see if there is presence of any reversal candlestick pattern. And when we look at that level, you can see that there is the presence of a hammer there. Can you see that? There is a hammer there, and that tells you that signals was reversal, and this gives you the confidence to go into the trade and make massive profits over there. So let me give you another example from a boss like breakout. Okay, so here we have another breakout example. Now look at the breakout. Price broke out from that zone and it came back to touch the level again. Can you see that? It came back to touch that level again before what, moving downward. If you move down, this is 15 minutes time frame. If you move down to the 5-minute time frame, you will get a clearer picture of reversal over there. So this is that particular level, that particular breakout on the 15 minutes time frame. So when you look closely on the 5 minutes time frame, okay, you can see the breakout and you can see the retest. And right at the point of retest, let me zoom in. Okay, right at the point of retest, you can see the presence of a reversal candlestick over here. Can you see that? Which is what, a shooting star. Can you see that? So that tells you that price is actually gonna what, reverse at that level and start what, trending down. And at this level, you can take your trade. Okay, now let's talk about how to avoid fakeouts. How do you avoid fakeouts? Fakeouts are very common when it comes to breakouts, and this usually traps a lot of traders and they end up what, losing money. Now let's say you saw a breakout from this zone. Let's say we have a little takeout over here. This scenario here is a fake out. Okay, it appeared like price actually broke that zone, like it was meant to start going up, but then it reverses what and starts coming down. And most breakout traders, they have lost a lot of money because of these fake outs. They get trapped out. They've seen a high momentum candlestick like this one here breaking that level, okay, and then they saw that they also saw that price reversed and came back here and came to kiss the level at which it broke out from, hoping that price is going to also reverse and come here, and they open their trade to go towards to buy, to go long, and then price turns backward and starts going down and they start losing money. It hits and knock out their stop losses. So how do you avoid these scenarios? The first thing to do is do not rush into entering trades when the breakout candlestick have not closed. You have to wait for the breakout candlestick towards to close. Make sure that you wait for this candle, this breakout candle. Make sure you wait for it to close and wait for the second candle to start forming for you to know if really it's going to start trending up or it's going to reverse and start coming down. Now, if you wait, now let's zoom in. So if you wait for this candle to close and you see the formation of the second one that is not really bullish, okay, the second one is a doji. Now, before the completion of that doji, you will see price going up and going down, and you will know that this price, there's no momentum. There's no momentum pushing it up. There's not enough momentum to push it up. So what do? You have to wait and see. You wait it out and see if that candlestick is actually going to go bullish or is going to start reversing. And at the end of the day, you can see that it was a doji that was formed at that level. And what does that signify? It signifies indecision, and doji can also mean reversal. And what happens next is a reversal. Can you see that price reversed? And for the retest traders, when price retest and came back to this zone, you don't just rush in. Okay, you don't just rush in and start opening your trade in order to go up. You have to wait it out. Check for presence of what reversal candlestick. If we look closely at this place, there is no reversal candlestick present at this level, and that is the reason why price came down. So this is how you have to trade in order to avoid fake out. Also, another thing to look out for is don't trade. Another caution to take: don't trade during low volume periods, okay, like during the weekends, okay, or odd hours. Don't trade at those time, okay. This helps you to avoid fake outs. So this is how to trade breakouts and be profitable. Now I'm going to give you a bonus tip that is going to help you to make you even more profitable by applying all these points and strategy entering techniques we have discussed in this bonus technique. So let's quickly recap all we have said and all we have learned. Now, we said first you have to ensure that you identify a clear range, okay, a clear consolidation range. Okay, so look out for a breakout candlestick and avoid wiki candles or a doji. So look out for a retest or a momentum, okay, and at the point of breakout, and then confirm with price action. Okay, what are those price action? Presence of reversal candlesticks, okay, and all that. So another thing you should put into consideration is use proper and good risk management. Protect your capital, set stop loss, and ensure you take profits when you need to. Okay, now let me give you a bonus tip to add to all these outlined techniques and steps. So one of the bonus tip, and that bonus tip is that you should combine all these techniques with what price action, like order block. Combine it with these techniques I've given you, and you will trade breakout like a pro. If you found this video valuable, I want you to hit the subscribe button, like this video, and turn on your notification bell so you'll be notified when we post many more amazing videos. Thank you for watching. Bye.